So in today's video, I'm going to be talking about how I personally built my trading strategy and how I was able to bring certain things together and make them form my strategy. So the first thing I did was I went onto YouTube and picked ICT's concept. Basically, what I did was I picked about 2, 3, 4 models, about 3 or 4, not 2, 3 or 4 models of ICT, and I incorporated it. That was just my technical analysis, alright? And to build a whole system, you need your technicals, you need your risk management, and you need other things in check. So that was how I got my technicals directly from my ICT. As it is, I picked 3 or 4 of his models and kept that. Second thing I did was I needed to find a risk management strategy that could help me grow my accounts and at the same time not help me blow my accounts, right? So I settled at 5% risk per trade on my live accounts. So it's simple. If I lose 3 trades, I lost 15%. If I win 1 trade, 1:3, I just made 15%, right? So that was the risk I employed. And most times, I don't even take a full loss. The goal for my risk management strategy was I just don't want to blow my account, while at the same time I need to grow my account fast because of why we need capital, right? And we need to make money. So 5% was the balance. I tried 10% and it was bloody. I tried less than that. It was too slow of a growth for me, and I figured at 5%. That was my risk management plan. Now I needed something that would make me not take a full loss but make my wins big, right? So big wins, small losses, that was my goal. And the only way I could achieve that was while my trade is running, I manage them efficiently. That brings me to the third thing, trade management, right? So trade management, basically what I employ is when my trade enters profits, I reduce my stop loss. But then I just don't blindly reduce my stop loss. I don't do this mechanically. I do this based on what the market is telling me, based on the information the market is giving. So if the market is like say 10-20 points in my direction, I reduce like 5 to 10 points of my stop loss depending on the market. Again, it is not mechanical. Don't go mechanically say when I'm up 1 hour I do. No. Sometimes when I look at my trade, I don't even feel like touching my stop loss and I let it be. What this helps me do is this helps me make my losses small and long run. So I may be on a losing streak and I lose like 4-5 trades in a row, but I didn't lose like 5% each of those trades. Probably one I lost 1%, one I lost 2, one I lost 0.5, one I lost 3, and then 5. At the end of the day, you find out that if you don't employ my kind of trade management strategy and you use my risk management strategy, you blow your account, right? So that's just that. And then some of you would say, he's not saying anything about psychology. Relax. That's the 4th point, psychology. This is something you should know about psychology. Trading psychology is not built in a day or a week or even a month. I personally use a full quarter to build the trading psychology I employ today. Until today, I'm still learning a lot of things about myself. Trading psychology is all about your mindset, the brain, how you react to losses, how you react to wins, and then most especially how you react to losses. Because everybody say don't be overexcited over a win, but we know it's very difficult not to be excited over a win. But in as much as you're excited, if you're too excited, it means you actually overreact on that trade. If you're not expecting the profits that you see on a trade, just know that you just don't know what you're doing. Because every trade you hop on, you should know the kind of profits or the kind of money you're looking to make if the trade goes your direction. So if you're too excited, it means you don't have a risk management strategy. That's me. That's my take. So my psychology, this is what I did. I brought my technical analysis strategy and my risk management strategy along as my trade management strategy and employed them for 3 months. I watched the market deliver. I watched the market play. I watched myself enter losses, come back to profits, break evens, and all of that. At the end of the day, I looked at my stats and I'm like, wow, I'm up in profits. Meaning, I need not to bother over 1 loss or 2 losses or 3 losses. I just need to allow the market play, allow probabilities play out. So psychology basically is you building confidence in your entire system. If you're confident of your system, you'd never be bothered over a loss. I took a loss yesterday. I lost $43 yesterday. But at the end of the day, I wasn't even bothered. I confidently show you guys my losses. I show you my wins because I know that that's the reality of the game. We spend to make money, right? That is the amount of money you put on the line so that you could make X amount of money, right? So don't be afraid of those losses. Don't be ashamed of those losses. Fuck the crap on social media saying you don't take losses. Our losses are fuck. Everybody takes losses. Every trader takes losses, but what separates us is you should have the mindset that I can always make money in this market. So I should not be bothered over just this one loss or just this two loss or just this losing streak. Okay, so that's it for today's video. And if you want to know how exactly I learned from ICT, you should watch this video up here. Peace.